Just a quick one before we get started here. If you guys are looking to get funded, I'd highly recommend Funding Engineer. I've traded with them many times before and have found them to be the most trustworthy company to work with. They have 4 leading industry challenges here as we speak, and if you do want to support me, please do click the link in my bio and my description to sign up so I can continue giving away to you guys. You will also be entered into a bi-weekly giveaway when you sign up through that link. So that being said, we'll head back to the video.
What is up everybody, and welcome to today's new video, where in this one today we're talking about swing points and laying a foundation around these so that we are able to trade from these swings forming at certain areas. So first of all, of course, as always, we want to define a swing point. Now a swing point is where we have here, it's a 3 candle formation. As you can see here, we have a lower high, a high, and then another lower high either side of the actual high itself. And then for a bullish swing, we have a higher low to the left of the main low, and then another higher low to the right of it. So it is a 3 candle formation where we have the middle candle's high has to be higher than both of the highs or lows on the other side. Either side, lower high and then a high, and then either side, higher low and then a low. That is the basics of a swing, and we will dive into the charts to look at some examples of where these swings occur and how we can navigate them to find a trade using ICT's concepts. So my first example here is a depiction of the daily chart, and I want to show you my favorite way to use these swings. So my favorite way to use them is on the daily chart, and it is when we trade into a PD array and we're expecting some upside or downside. Once we retrace into the PD array on the daily chart, I look for a swing, low or high to form, and then the consecutive days following that swing, low or high forming, should provide nice legs up and nice movement towards our target. So in the example here, you can see we have an order block which trades into another order block. We pull that across and we have a run up and then leg down in price. We retrace into a deep discount and have came back into the order block, and now we look for price on this daily chart to create our swing formation. So we have a low here, the second candle creates a low, and then the next candle opens up, creates a higher low to the right of it, which gives us our 3 candle formation, moves up, and then the way I like to use it is you can see here we have these equal highs intact. So these equal highs have not been taken out yet, and we've created our swing formation into a PD array. So we can expect the 4th candle after the swing low or high has formed to expand towards our target. In this case, you can see the swing forms, and then the 4th candle expands above these highs, clearing out liquidity, and this would be the day we're trading. Now, how do you trade the 4th day? Well, we use a classic open low high close formation or open high low close formation if we're looking for sells. In this case, we're bullish. So if you zoom in here, you can see we have an open, a low formed, which is incorporating the use of power of 3, the low forms, and then expansion, high, and close. Once we are anticipating the 4th candle, we use a classic open, low, high, close to trade that 4th candle intraday. So of course we would dip down onto the 1 hour chart or the 15-minute chart intraday, and within our kill zones look for this sort of formation to happen on that 4th day. So let's dive into this candle here and I will show you what I mean. As you can see, I'm on the hourly chart here now, and this is the order block we traded into, created the swing low, and then now we're on the 4th day looking for our open low high close to form. Remember, we have our buy side liquidity up here, and now we zoom into this price action here and look if we can find something to possibly enter off. If you look inside here, we have the midnight open marked up. Now Thursday, midnight open, is our perfect fourth day. So this is the day we want to be trading, looking for that expansion to the upside. You can see a dip down below midnight opening price is what we want to see. That is our Judas swing. Again, if you look here on the hourly chart, we create a swing low into this candle here. A swing low's formed, we expand to the upside, and if you take your eyes inside here, we have institutional order flow entry drill before running higher. So that is our entry. We take buys there and aim for this consolidation up here. All of this trade simply formed off the idea of that swing low forming on the daily chart as we got our retracement. Then we break down the framework of that day on the hourly chart and find our entry for buys. Now I want to take you into a bit more of an advanced example where we have a rejection block over here. Price trades through, rejects, retraces, and as you can see, of course, we do cut through candles. Now this rejection block is used here to send the price higher. And you may notice a familiar pattern inside here. As we trade back into the rejection block, you can see that we leave a low, a lower low, and then a low next to it. So we have our 3 candle formation, and then price moves to the upside. On the daily chart, this is quite a small candle. However, intraday, that is a nice move to the upside into this candle here. But then I want to also point out how once we have that move up, we leave a down close candle. So what should down close candles do as we're bullish? They should support price to the upside. We trade back into it and then create our formation again. A low, lower low, another low, and then expand to the upside. Notice we clear out this high left up here. Now, remember, all of this came from the rejection block back here being traded through. We get a retracement. Our formation forms on the daily chart. We move up, and then again, because we're bullish, we wait for this formation to form and then get another leg up. The following days provide the expansion. It is simple how it all ties in together, and you can use this one swing formation to frame the next few days once we have a daily bias. So for example, even here, once we traded past this low, we created our swing low here. Our target is this liquidity resting above this high and this high here. And then you can see once we create the swing low with the 3 candles, the next few days expand upwards. This is the simplest method to finding your daily bias for the next few days. So once we have the swing form, our next few days daily bias are almost given to us on a silver plate. If we have a drawn liquidity, then you know that the next few days should expand towards that liquidity after creating the swing. The final way I want to show you how I use swing points is for liquidity targets. So once we enter a sell program after being in a buy program, this may also look like a market maker sell model to you. You can see that we have swing lows created as we're moving up, because we all know that swing lows created in buy programs, that gives us expansion for the next few days. Now, once we move to selling and we're bearish on whatever pair we're trading, these swing points can become nice areas of liquidity for us to tag. Why are they nice areas of liquidity? Because retail have their stop losses below these points. So everyone who's long in this move upwards, they're long and put their stop losses below these points because they look like clear lows. And retail logic says support should hold as support and these should not be traded below. We know that we use these as liquidity, and as we trade lower, these swing lows get tagged and used for liquidity. As you can see here, all the swing low formations that we used as we were moving up are now being used for people going short to get out of the market. And as you can see, that all works out as we're trading lower. These are our main liquidity points. So let's say you're in a sell from up here, every time we trade below one of these swings, you should look to take partials at these points. When we move down here, partials, move towards the next swing point, more partials below here. So that now brings us to the end of this video. If you did enjoy and find this useful, please do drop a like and comment. The link to all my socials are in the description below if you want to follow me on there. I am always active. And thank you for watching. I'll catch you in the next one.